Hi, I'm Alvarez at MortgageWorks, where we have the answers and they're on the house. With today's higher interest rates, it's putting more focus by borrowers and prospective home buyers on the relationship between their desired down payment, their mortgage amount, and their monthly payment. So I want to dive into this in a little bit more detail because this is an important nuance that I think a lot of borrowers don't really grasp. That is the relationship between these different numbers. Let me give you an example. Let's say we have a home buyer looking to buy a home for $600,000 and they're going to put 20% down. So their loan amount's $480,000. Well, the monthly payment, we'll use a 6% interest rate for 30-year fixed, would be $2,878. Well, a year ago, when rates were at 3%, that monthly payment would have been $2,024. That's over $850 lower than what today's borrower is encountering for the same loan amount. So an immediate response I usually get when presenting these kind of numbers to a borrower today is, well, how much additional down payment do I need to make so I can get that $2,024 a month payment that was available a year ago? Well, the borrower is usually shocked and disappointed to find out it's a significant increase. In fact, the borrower would have to put more than $140,000 additional down payment to achieve the same monthly payment as a year ago. That means the loan amount would have to be reduced from $480,000 to $338,000. That means almost a 50% down payment. So talk about payment shock. So we run into this commonly, and of course, borrowers are kind of puzzled as to why it is. Well, the answer is pretty simple. At current rates, a 6% rate, each $1,000 less borrowed only reduces your monthly payment by $6 a month. Back a year ago, when we were at 3%, each $1,000 less borrowed only reduced your monthly payment by $4 a month. Not very much. And this has a related issue as it relates to qualifying, based on debt ratio. Because of course, these days at these higher rates, when we're pre-qualifying a borrower for a home purchase, and if we're running into a debt ratio problem and we need to get it down somewhat, a common response is, well, can I put more down? What if I put $10,000 more down? Will that reduce my monthly obligations by the $200 a month reduction that is needed to get my debt ratio in line? Well, again, the borrower is almost always disappointed and to learn that $10,000 additional down payment only reduces their monthly payment by $60 a month, not the necessary $200 a month to get their debt ratio in line. So that almost always means that a more efficient way for any dollars available to get your debt ratio in line is to not apply it toward additional down payment to reduce your mortgage amount, but apply it toward your other monthly debt obligations. Because almost always the available amount of money you have for payoff will have more bang for the buck by applying it toward monthly recurring debt for a given amount of payoff funds provided. In other words, a $10,000 reduction in loan amount will reduce your monthly payment by $60 a month. But depending on how that $10,000 is applied toward payoff of other consumer debt like credit cards, installment loans, et cetera, it can oftentimes, in fact, most cases, achieve a greater monthly savings in terms of total obligations, which is going to be more effective in reducing your total debt ratio. So, and by the way, when we're looking at having to apply additional available funds to pay off debt to reduce the debt ratio within acceptable limits, we always focus on trying to pay off as much as we can in terms of reducing monthly payment for as little dollars expended to create those payoffs. That way, we're being most efficient with the amount of money used to do those payoffs. So again, this is just some important details, some important nuance about the relationship between mortgage rates, monthly payments, and mortgage amounts, and understanding the relationship between how much you put down and how much that affects your monthly payment. So I hope that helps. If you have more questions about any of these topics or anything else you need help with in the mortgage industry, feel free to give me a call. My information's on the screen, and I'd be happy to help. That's MortgageWorks. We have the answers. They're on the house. Thank you.